not been great for Asian equities, but lately they have improved. Have there been any changes to your stance?
There's no change in our equity asset allocation. We remain overweight, but I would say the reason for the volatility, if I had to pick one, is that the U.S. Federal Reserve, through not only the chairman but several other presidents of the respective Fed banks, has been telegraphing a message that if the economy continues to improve, it will look to reduce its asset purchases. And I think that as much as fundamentals are part of what's propelled the equity bull market, we have to admit that liquidity has been a major part too, and less liquidity would not be a good thing.
What is your stance on gold? Would you avoid it after recent corrections, or do you expect more weakness?
Yeah, we are not buyers. In fact, we just sold the last of our gold, or we're doing it in increments now. Gold had this attribute as a counterbalance to the quantitative easing that has been pursued by central banks since the global financial crisis. As I said earlier, the Fed is telegraphing that it's going to reduce its purchases. Of course, the Bank of Japan said it will increase its purchases, but the fact there was no reaction to that news in the gold market a couple of weeks ago, to me, was a very ominous sign. And in retrospect, there's just too many people who own gold. If you look at ETF shares outstanding, they're very, very high. And investor perception of this asset class, I believe, is just done an about face, and that damage has been done and it won't change. So even if there's a lot of physical demand coming out of places like India, China, even here in Singapore, the investor sentiment is bad, and that will continue to push it lower.
What do you make of the recent noise regarding the Fed exiting QE3? Should investors be worried?
I think worried is probably the wrong word, but gold investors certainly. As I said at the beginning, I think that if you had to pick one reason for this massive collapse in gold, it is the Fed telegraphing that it will reduce its asset purchases if the economy continues to recover. But the other side of the coin in reducing the asset purchases is that they wouldn't do that unless they felt the economy was strong enough to stand on its own two legs. So there might be an intermediary period of volatility as we adjust to a lower rate of monthly Fed asset purchases. But I think the net impact would be beneficial in the sense that, as I said, it would be in response to an improving economy. And longer term, I'd far rather invest in securities because I felt the economy was getting better than invest in securities because I thought central banks were going to keep pumping a lot of money into them.